Examples here. 16.2 from page 700. Hampton Company reports the following information for its recent calendar year: sales, cost of goods sold, salaries, depreciation expense, net income. Changes in current asset and current liability accounts for the year that relate to operating activities are listed as well. Prepare the operating activities section of the statement of cash flows using the indirect method. Well, what do we start with? Start with net income, $24,000 given to us right there. Then we're going to basically make the adjustments to reconcile net income to operating cash flow, where we're going to go in and essentially reverse out the effects of anything that got us to net income but didn't actually affect cash. So depreciation expense is added back in. Increase in accounts receivable is subtracted. Decrease in merchandise inventory added back in. Increase in salaries payable added back in. For the $19,000 sum total difference between net income for net cash provided of $43,000. All right, following income statement and information about changes in non-cash current assets and current liabilities are reported. This should look familiar. Prepare the operating activities section of the statement of cash flows using the indirect method. So all relevant information is transferred over to this slide. And again, we start with net income or net loss. In this case, net loss. And we will just and reconcile and reverse out all of the items that went into the net loss calculation. But again, are basically non-cash affecting items such as depreciation expense, which we will add back in. The decrease in accounts receivable we also add back in, along with an increase in salaries payable. And then we finally will subtract out the decrease in the other accrued liabilities accounts. Sum all of that up, and we go from a net loss of $16,000 to net cash provided by operating activities of $32,600. Use the above information to determine the company's cash flows from investing activities now. So we're basically going to reconstruct, just like we did or just like we talked about in the lecture. We're going to go back and reconstruct these items. Okay. So we've got accumulated depreciation. I'm sorry, on this particular item, which is number A here, we are we are reconstructing the sale of this piece of equipment. We see that cash was received from the sale of equipment there. Okay, this next part B entry there, pretty straightforward transaction, cash for truck, and we see the cash effects of that there. We've got cash received for the sale of land, so obviously that is affecting cash as well. And then for part D down here, we've got some stock that was sold, yielding a gain, and obviously since that affected cash, that is relevant here. So we basically looked at all relevant transactions, recreated them, and looked, okay, how much does each of these transactions touch the cash account? Then we pulled the effect of each of those reconstructed transactions, the cash effect of each one of those out, and basically stuck it into cash flows from investing activities here, and that is what allowed us to sum out here. You'll see when we get to financing, which is this one, that it will look very similar. Okay, so again, we've got these transactions. We're going to recreate them in order to pull out the components that affected cash. Okay, so proceeds from common stock. Obviously, in the financing activities, we're not worried about net income. Net income is only the starting income, or loss is only the starting place if we're talking about the operating activities section. So we're not worried about that. B, issued common stock for $64,000. So obviously the cash component of that right there. Paid cash dividend, so the cash negative component of that right there. Paid $50,000 cash to settle note payable, so $50,000 cash is going to go right there. Paid $12,000 cash to acquire treasury stock, so treasury stock outflow $12,000 cash, and then purchased equipment for, I'm sorry, that would be not considered a financing activity. Then when we sum all those up, just like you saw in the previous slide, that would total out now to financing activities, net cash used instead of investing activities.